Okay, good morning, everyone. Looking at the US stock markets, the Dow has a breach above the 23,600 point level. Since then, the Dow continues to trend higher, and subsequently, on last day itself, it closed at a fresh all-time high level at the 24,650 points level. So, following this short-term, the mild pullback psychological level. This could be the breakout pullback and continuation pattern that we are seeing the Dow to trend towards the 24,750 points. That will be the next resistance for the Dow Jones Index at current juncture. Gains on last Friday on the US stock markets was underpinned by the optimism of tax reformation plan in the US. S&P 500, we did see the S&P 500 has made a good consolidation breakout above the 2600 psychological level earlier on. Then the S&P 500 closing off on 27. So the breakout broke and the continuation from the 2600 breakout pullback and expecting the S&P 500 to trend towards the 2700 psychological level of the immediate resistance for the S&P 500. 2605 and also the 2600 will serve as the immediate support. On last Friday, we did see all sectors close in the on the S&P 500. Crude oil prices, it continued to trend higher earlier towards the 59 US level. Since then, some of the resistance of the 59, we did see the consolidation has kicked in on the crude prices between the 55 to 59. So meantime, we'll continue to monitor these two levels, the 5 to 59. If it's above 59, then we might see further upside for crude prices back the oil went towards the 63, 55, and also the 50 was the immediate support level for the crude prices for now. So the good is on the bigger picture, crude price has been very high, so higher low formation. While in this moment, we are expecting this to be the symmetrical triangle breakout on the crude prices. So this triangle formation called massive upside for crude prices. On a local front, the FMKLCI has earlier formed the good bullish engulfing candle and subsequently the key index has made a good breakout above the EMA 20 level. Following the breakout of the EMA 20 level, we did see the follow-through buying interest was noted on the FMKLCI index, subsequently rising for the 40 points over the past 3 trading days before some of the mild profit-taking activities kicked in. So moving forward, we're expecting the consolidation to begin for the FMKLCI towards the 1750 level, and subsequently we might see further upside for the key index towards the 1760 or even towards the 1770 level on the FMKLCI. That will be a healthy one to allow investors or traders to digest the gains before the next up run to resume. In a similar manner, the FM market index was traded quite positively as well. We did see the bullish candle. We did mention the market index. From that point onwards, we did see the FM market index has hit the resistance along the 16,860 points level, forms some of the bearish candle. So healthy towards near the 16,630 points level is market index. Some of the stocks that we can watch out for will be MIG. MIG has then hit some of the reasons along the 237 level. Then price has pulled back, forming some of the hammer candle on top of the 1 ringgit and level. After forming a hammer candle on top of the 1 ringgit 91 cents, we did see some of the mild recovery pattern begin. Price converts, and once again another good recovery kick in, the company will start revising volumes. So recently we did see MIG have experienced good symmetrical triangle formation as well on last Friday above the 2 and 11 cents or 11 cents level. The symmetrical triangle, you must see for the upside for the MIG towards the 221 back towards the 237 cents level. If your stop loss point located below the MIG. Following this triangle formation, we did note that the MACD line has really issued a high signal, just that it's still below 0 level, whereas the SI has risen above 50 level as well, implying that the recovery is intact on compared to M+Online. Similar IG, as Alan hits on the resistance along the forming a hammer candle towards the 2 cents, forming a double formation on top of the 2 cents. After hitting 2 cents, we see some of the mild pattern on flat as price from and also the higher low of this period of time. So for Morphaland, breakout both the 2 cents level. Upon the breakout of 2, we can trade the price that they went towards the 3 and 4 cents level. The stop loss point is below the 246 cents for Morpha. For Vico, price has made good price sharply just the EMA level traded space. Recently, we did note that some manipulation is based on being traded in this period of time. So for we did see a good short-term breakout above the 30.5 cents level, accompanied by some of the improvement in volumes on the Friday itself. So following 30.5 cents, we go for the 34 level, subsequently towards the 36.5 with stop loss point in the 28.5 cents for Libico. This kind of pattern, the breakout, the pullback, and the continuation pattern for Libico towards the 36.5 cents level. We did see that the upward formation is going to establish as well. The M9 could be crossing above the 20, stay on 120. For MRCB, has made a very good recovery pattern. We did see a good bullish divergence signal. The price has been trading lower during this period of time, but the MACD indicator has been creeping higher. And following this bullish signal, we did see MRCB hitting the high of 1.15 cents in a couple of days of 15 cents. MRCB has experienced a pullback, and the continuation pattern was establishing. So following this recent recovery pattern, we did that MRCB has experienced a good record above the 1.07 cents. Then it did break above the 1.07 cents, but it did not close above the 1.07 cents. But on last Friday itself, we did see price has closed above the 1.07 cents level, accompanied by some rising volumes. Following the break of 7 cents, we can trade MRCB towards the 115 and subsequently towards the 1 ringgit and stop loss pointed below the 1 ringgit 2 cents for MRCB. Last opening for day one of it will be a Kanga. Kanga is still on the downtrend so now it's just on a temporary bounce side. So has recovered from the 19.5 cents level. Since that price has made a 24.5 cents level. The 24.5 cents level will serve as a very strong resistance level as well. Along with this is the reaction along the 21.5 cents. So once again here. So following the thing of 24.5 cents, we see a pullback kicking on Hanger with some declining volume, implying that the best during this phase of rally is still in position. So for Hanger, what we monitor for this breakout is short-term trend line, which is the 22 cents level. Upon the breakout of 20%, we can trade Hanger 1.5 cents and also the 26.5 cents level. located below the 21.5 cents level. So the risk to is quite lucrative. As you see, 1 cent risk towards a potential 2.5 cents again. Last company for the deal is M+Online. M+Online made a gap down formation after the company has announced a weak setup of deals. Since then, the company continues to drift lower, but recently we did see price has made a good position of a candle and pull back sideways. After the company has once again announced a weak set of quarterly earnings, with price gap down, but subsequently, buyers has the boost in control on Superlon. Unlike on this day itself, it got down and the bears have taken control. But on this quarter itself, we did see the bulls have in control as the price has made a good relation of. Look at the weekly chart itself. It's certainly telling us that this could be the first phase of a price pullback, potential recovery pattern following the hammer candle on a Superlon. So the on the daily chart itself, we're going to monitor for this to see if there's any potential buying interest of 2 ringgit and 18 cents level. Of the breakout of 2 ringgit and 18 cents, we can trade super towards the 239 and subsequently closing the gap towards the 271 level. If you stop point below the cents level, if there's a breakout of 18 cents for Superlon. If you have any questions, you can put in the chat box. If there are no questions for today, then we'll end the morning briefing. Thank you.